Most people believe Warren Buffett became one of the richest people in history because he always picked the perfect stocks. But that isn't the real story. His greatest advantage was never predicting the future, it was following a wealth formula so simple that most people overlook it. While the world chased trends, shortcuts, and overnight success, Buffett quietly built a fortune by thinking differently. Decades later, markets have changed, technology has transformed the economy, yet his principles remain just as powerful. The question is, what makes this formula timeless? If you ask most people how to become wealthy, the answers usually sound familiar. Work harder, earn more, find the next big investment, buy before everyone else does. The focus is almost always on doing more, moving faster, or chasing the next opportunity. Warren Buffett saw the world differently. He believed wealth wasn't built by constantly making new decisions. It was built by consistently making better ones. That sounds simple, but it's surprisingly difficult in a world designed to reward impatience. Every day, we're surrounded by headlines promising quick profits, social media celebrating overnight success, and financial trends that make long-term thinking feel outdated. The pressure to act is constant, even when doing nothing is often the smarter choice. Buffett understood that markets don't just test your knowledge, they test your character. The biggest enemy of an investor isn't inflation, interest rates, or even a market crash. It's the urge to react emotionally whenever uncertainty appears. That's why his philosophy has survived every decade. While others changed strategies with every new trend, Buffett remained committed to a handful of timeless principles. He wasn't trying to outguess the market. He was trying to outthink human nature. And that simple shift in perspective leads us to the real wealth formula, the idea that quietly shaped every investment Buffett ever made. If you ask most people how to become wealthy, the answers usually sound familiar. Work harder, earn more, find the next big investment, buy before everyone else does. The focus is almost always on doing more, moving faster, or chasing the next opportunity. Warren Buffett saw the world differently. He believed wealth wasn't built by constantly making new decisions. It was built by consistently making better ones. That sounds simple, but it's surprisingly difficult in a world designed to reward impatience. Every day, we're surrounded by headlines promising quick profits, social media celebrating overnight success, and financial trends that make long-term thinking feel outdated. The pressure to act is constant, even when doing nothing is often the smarter choice. Buffett understood that markets don't just test your knowledge, they test your character. The biggest enemy of an investor isn't inflation, interest rates, or even a market crash. It's the urge to react emotionally whenever uncertainty appears. That's why his philosophy has survived every decade. While others changed strategies with every new trend, Buffett remained committed to a handful of timeless principles. He wasn't trying to outguess the market. He was trying to outthink human nature. And that simple shift in perspective leads us to the real wealth formula, the idea that quietly shaped every investment Buffett ever made. At the heart of Warren Buffett's philosophy lies one simple idea that separates ordinary investors from extraordinary ones: stop thinking like a trader and start thinking like an owner. It sounds like a small shift, but it changes almost every financial decision you make. Most people see a stock as a number moving across a screen. They celebrate when the price rises and panic when it falls. Buffett has never looked at investing that way. When he buys shares of a company, he imagines owning the entire business. He asks questions most people never consider. Does this company create real value? Will people still need its products 10 or 20 years from now? Is it managed by honest and capable leaders? Can it continue growing even when the economy slows down? Those questions have nothing to do with tomorrow's stock price. They are about the long-term strength of the business itself. Imagine buying a small coffee shop in your hometown. You wouldn't wake up every morning asking what someone else would pay for it today. You would focus on serving customers, improving the business, and earning profits over many years. Buffett believed investing should feel exactly the same. That mindset removes much of the fear that drives poor decisions. Market prices will rise and fall, just as the weather changes from season to season. But a strong business with lasting value doesn't suddenly become worthless because people are temporarily pessimistic. This is why Buffett rarely chases excitement. He searches for quality, buys with conviction, and gives great businesses the time they need to grow. Once you begin thinking like an owner instead of a speculator, investing stops feeling like a gamble and starts becoming a disciplined process. And that's where the real power of Buffett's wealth formula begins to reveal itself. Thinking like an owner is only the beginning. The real challenge is having the patience to let that decision work in your favor. This is where Warren Buffett separates himself from the vast majority of investors. Modern markets reward speed. News spreads in seconds, stock prices move every minute, and people feel pressured to act simply because everyone else is doing something. Buffett has spent decades proving that constant action is not the same as intelligent action. He often says the stock market is a tool for transferring money from the impatient to the patient. That isn't just a clever quote, it's a reflection of how wealth is actually built. Great businesses don't become extraordinary overnight. They grow one customer, one product, and one smart decision at a time. As they grow, the value they create begins to compound, and that compounding becomes one of the most powerful forces in finance. Imagine planting an oak tree. You don't dig it up every week to check whether it's growing. You water it, protect it, and trust the process. Years later, it stands stronger because you gave it time. Investing works much the same way. Every unnecessary decision interrupts the very process that creates long-term wealth. Buffett understood that patience isn't about waiting without purpose. It's about having enough confidence in your decisions to ignore the noise surrounding them. While others become distracted by daily headlines and short-term price swings, he stays focused on the bigger picture. This ability to remain calm when everyone else becomes emotional has protected Buffett through countless market booms and crashes. But patience alone isn't enough. Eventually, every investor faces moments when fear takes over the market. And how you respond in those moments often determines whether you build lasting wealth, or watch opportunity pass you by. Every investor says they want to buy great businesses at low prices. But when those opportunities finally appear, most people do the exact opposite. They panic. They sell. They wait for certainty to return. Warren Buffett understands a simple truth that many investors never fully accept: the market rewards courage far more often than comfort. Think back to the biggest financial crises in history. During those moments, headlines predicted disaster, confidence disappeared, and fear spread faster than facts. To most people, falling prices looked like a warning to stay away. Buffett saw something entirely different. He saw strong businesses being offered at prices that made long-term investing far more attractive. This doesn't mean buying every stock that falls. Buffett has never believed that cheaper automatically means better. His focus has always been on quality. A wonderful business selling at a reasonable price is far more valuable than a weak business selling at a huge discount. The difference lies in understanding what you're actually buying. Imagine walking into your favorite store during a massive sale. If you already know the product is valuable, a lower price feels like an opportunity, not a reason to run away. Buffett believed the stock market should be viewed with the same mindset. Price changes every day, but value changes much more slowly. Of course, staying calm while everyone else is afraid is easier said than done. That's why successful investing isn't only about analyzing businesses, it's about mastering your own emotions. Fear and greed have influenced markets for centuries, and they continue to shape investment decisions today. Buffett's greatest edge has never been superior intelligence alone. It has been emotional discipline, the ability to remain rational when everyone else is reacting emotionally. And that discipline ultimately begins long before money is ever invested. By now, it might seem that Warren Buffett's success is built on finding exceptional companies. But if you look closely, you'll notice something deeper. His greatest investment has never been in businesses alone, it's been in the way he thinks. Most people spend their lives reacting. They react to breaking news, market swings, social media opinions, and the emotions of those around them. Buffett has always done the opposite. Before making a decision, he steps back, removes emotion from the equation, and asks a simple question: what are the facts? That habit sounds ordinary, yet it's incredibly rare. The world rewards quick opinions, while Buffett rewards careful thinking. Instead of trying to predict tomorrow, he focuses on understanding what is likely to remain true for years to come. That's why he spends far more time reading, learning, and thinking than chasing the latest financial trend. Imagine two people setting out on a long journey. One constantly changes direction every time someone suggests a shortcut. The other follows a carefully planned map, adjusting only when the facts truly change. After enough time, the second traveler almost always reaches the destination first, not because they moved faster, but because they wasted less energy. Buffett has treated investing in exactly the same way. He believes that clear thinking creates better decisions create better investments, and better investments create lasting wealth. The formula has never been about intelligence alone. It's about discipline, patience, and the ability to stay rational when the world encourages the opposite. And perhaps that's why Buffett's philosophy has survived generation after generation. Markets evolve, technology changes, and economies transform. Yet human nature remains remarkably consistent, and that's exactly why his wealth formula never goes out of style. Every generation believes the world has changed so much that the old rules no longer apply. New technologies emerge, industries disappear, and markets move faster than ever before. It's tempting to think that investing must constantly evolve just to keep up. Yet Warren Buffett's greatest lesson suggests something very different. The tools may change, but human behavior rarely does. People still become greedy when prices soar. They still become fearful when markets fall. They still chase what everyone else is buying and abandon what they once believed in during difficult times. Buffett understood that while businesses and technology evolve, human psychology remains remarkably consistent. And because markets are driven by people, the principles that worked decades ago continue to work today. This is why Buffett never built his fortune by predicting every trend. Instead, he built a framework for making better decisions regardless of what the future looked like. Whether the economy was booming or struggling, whether interest rates were high or low, his questions remained the same. Is this business understandable? Does it create lasting value? Is the price reasonable? Can I confidently own it for many years? That consistency became his greatest competitive advantage. While others were constantly changing strategies to match the latest headlines, Buffett stayed committed to principles that had already stood the test of time. Perhaps that's the real wealth formula. It's not a secret investment or a hidden strategy available only to billionaires. It's a way of thinking that anyone can adopt. Markets will continue to change, new opportunities will appear, and unexpected challenges will always exist. But the investor who remains patient, rational, and focused on long-term value will always have an advantage. And that may be the most timeless lesson Warren Buffett has ever taught. In the end, Warren Buffett's wealth formula has never been about becoming the richest person in the room. Money was always the result, not the destination. The real reward was something far more valuable, the freedom to make decisions without being controlled by fear, pressure, or the need to impress others. That perspective changes everything. When wealth becomes a tool instead of a goal, investing is no longer about chasing every opportunity. It's about building a life where your choices are guided by patience, purpose, and independence. Buffett has often lived far below his means, stayed loyal to his principles, and ignored the constant noise of the financial world. Those habits weren't sacrifices. They were the foundation of lasting success. Think of wealth like building a lighthouse. Storms will come, waves will crash, and the tide will constantly change. You cannot control the weather, but you can build a foundation strong enough to stand through every season. Buffett's philosophy is that foundation. It isn't designed for the next market rally or the next headline. It's designed to last a lifetime. The market will always tempt you with shortcuts. There will always be new trends promising faster results and easier money. But history has shown that lasting wealth rarely belongs to those who move the fastest. More often, it belongs to those who think the clearest, stay the most disciplined, and remain committed to timeless principles when everyone else is chasing the latest idea. So perhaps the real question isn't whether Warren Buffett's wealth formula still works. After decades of success, history has already answered that. The only question that remains is whether you're willing to think differently and apply those same timeless principles to your own financial journey. If you enjoyed this documentary, consider subscribing for more timeless lessons on investing, wealth, and financial freedom.